The US dollar index continues reaching fresh two-year highs, approaching the critical level of 100 points. The Fed's aggressive monetary policy tightening is the main driver of the greenback's appreciation. Most representatives of the central bank more and more often provide hawkish comments, hinting about the Fed's readiness to raise the benchmark rate by 50 basis points at a time. Of course, such rhetoric is strengthening the US currency. In our video review on InstaForex TV channel, we will find out what events will affect the currency market early next week. And that's all for now. We continue to learn developments on financial markets. You have watched the Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading with InstaForex and see you soon. At the beginning of the trading week, traders will learn about the global economic conditions by analyzing China's consumer price index data. China and the United States are competing for the title of the world's largest economy. That's why it's obvious that trends in the Chinese economy reflect the global economic situation. Notably, the current epidemiological situation in the country is not favorable. As a result, the lockdown was introduced in Shanghai and Shenzhen, two industrial, logistic and financial centers of the country. According to the forecast, consumer inflation may accelerate to 1.2% from 0.9% in March. While in China, the CPI growth is quite stable, in other countries it's spiraling out of control. Signs of successful measures aimed at capping inflation growth may boost interest in risk assets and cause a short-lived sell-off of the safe haven assets. For example, the dollar-yuan pair may go on gaining in value. On Monday, the pound-dollar pair may also show a jump. The UK is expected to disclose a bulk of macroeconomic reports, including trade balance, industrial production, and the GPI data for February. In January, the indicator surged thanks to lifting on measures imposed to combat the virus spread. In February, the UK's GDP is likely to display a slower increase. Nevertheless, all the indicators will remain in the green, reflecting the economic stability. This fact may encourage investors and trigger a short-lived rise in the pound-dollar pair. On Tuesday, all eyes will be turned to the UK labour market reports. Analysts suppose that in February, the UK unemployment rate dropped to 3.8% from 3.9%. However, they are still hesitating to provide forecasts for the number of unemployed people. Judging by high inflation and the ongoing growth in salaries, all the reports on the UK labour market could be positive. In this case, the British pound will have a chance to recap losses recorded during the outgoing week. However, data from Germany is likely to be disappointing. Experts at the ZEF Institute may report on worsening economic sentiment. In April, the indicator may continue falling amid numerous sanctions against Russia, the main supplier of energy resources. In the previous period, the indicator showed the largest decline for the first time since the record began. Notably, the economic sentiment slump took place amid extremely high inflation. Under the current conditions, the German economy may face stagflation in the near future. And against this backdrop, investors may start selling off the euro. Later on Tuesday, the US is going to publish its consumer price index figures for March. On a yearly basis, the indicator has already hit the 40-year high, and there is no doubt that it will continue climbing to 8.3% from 7.9%. The fact is that energy prices are affecting all other prices. The news may force traders to buy the US dollar since the unprecedented inflation growth needs an immediate rise in the benchmark rate. In the UK, the consumer price growth is a bit more moderate. Nevertheless, the indicator has also reached its 30-year high. However, forecasts for UK inflation growth sometimes do not meet reality. That's why inflation may accelerate to 7% on a yearly basis. Judging by the Bank of England stance, traders may consider the news to be a signal for a new rise in the key interest rate. That's why the British pound has every chance to gain in value. In general, all central banks of the main world economies, except for the ECB, are tightening their monetary policy. On Wednesday, the Bank of Canada will report its interest rate decision. According to the forecast, monetary authorities may decide to raise the benchmark rate by 50 basis points to 1% at the meeting scheduled for April 13. The Governing Council foresees a further increase in the benchmark rate amid the ongoing economic growth and the high inflationary pressure. Thus, the Canadian dollar may advance against the greenback. And that's all for now. We continue to learn developments on financial markets. You have watched the Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading with InstaForex and see you soon.